Folks, welcome to Best Stock Charts for the coming week. This is Bob Desmond over at the Contrarian Trader, and we're going to talk about a bunch of stocks that we're watching very, very closely for the new trading week. MDRX, BRY, Berry Petroleum, Caterpillar, CAT, FireEye, a big pipeline shutdown last week, great play, reacted well. GLNG and NGS, natural gas plays. NGS was actually a trade brought to my attention by our fellow member Franklin. He gets the credit for that one. Great call, Franklin. And HGV, that's Hilton Grand Vacations. That's a real pretty stock chart that's setting up. So we'll talk about those symbols. We'll review the charts. We're going to go over Boyle, natural gas leveraged ETF. If you don't want the volatility of a leveraged ETF, just simply trade the UNG. We're going to talk about that. This is a new trade. We're going to share with you our strategy moving forward because we changed it up a little bit from what we were doing. And I'm going to share with you how we did last week because you need to know, why are you listening to me? How did I do in a very volatile market? We did pretty well, and I'll share it with you. But before we go to the charts of these symbols, I want to talk to you about our sponsor, which are the folks over at TrendSpider. Now, TrendSpider is your one-stop shop for automated technical analysis. If you're not using automated technical analysis nowadays, you're not trading with the big boys. You're behind the curve. You need to step up your game, start using technology. And that's not me being condescending. It's me offering you very, very favorable and important advice. Because even if you're an experienced technician like I am, you're still going to get value out of the automated trend lines because I still draw my trend lines manually using TrendSpider. However, I validate my accuracy by using their automated trend lines. And many times they'll pick up trend lines that I didn't even think about. So it ups my game. If you're new to trading and you don't know what support and resistance levels are, where they should be, well, this is how you hone your skills, by using real-time validation of where you believe support and resistance levels might be and testing yourself. And once you begin to build your confidence with knowing where support and resistance levels are, guess what? You become a far more effective trader. Why? You eliminate the impulse buying. What I like to call my trading method is if this, then that. It's not sexy, right? But what it means is that you're buying at support levels. You're buying at breakouts. How do you identify those support and resistance levels? Automated technical analysis. So I don't want to drag this out. Automate your grunt work, speed up your analysis, and improve your accuracy with automation, algorithms, artificial intelligence, folks. It's here. It's very, very reasonably priced as well. So what the institutional investors have at their fingertips is now available to the retail investor. Reduce costly analytical mistakes by using those automated trendline features. Find winning chart setups using their scanners. You don't need to build them. They're already there, built for you. You can modify them, make them your own. And time your trades with precision by using their trade alert functionality. And I'll be showing you how to use the automated trend lines and the trade alert functionality today. So use the link below, 35% discount code below, the cheapest price on the web. They have a demo, take a tour, 7-day free trial offer, and they also have TrendSpider University, a lot of tutorials here, and they'll also be available to you to walk you through the setup process and any questions that you might have. A very powerful team over there. So head on over, use the link below, 35% discount code below, 7-day free trial offer. If you want to join the Contrarian Trader, I give it away free to silver and gold level members. You get a 14-day free trial there. So let's get to it. Now, I'm going to talk about some charts that we like moving into the new trading week. I'm going to caveat what I'm about to review by saying these are simply watch stocks. I've already posted in the members area at the Contrarian Trader the week ahead commentary where I review the health of the overall market and our strategy moving into the new trading week. Now, there are certain things that could unfold that may cause me to want to lean to the short side rather than getting long. So simply because I'm talking about these names right here, right now, doesn't necessarily mean I'm pulling the trigger if, let's say, yields begin to spike up higher. That's going to cause me to become much more risk adverse and probably lean into the short side. But all things being equal, we trade sideways on yields or down on yields, well then we'll be looking to buy stocks. So let's get to it. First up is BOIL, natural gas. Why is this significant? Well, we bought it last week. And it's significant because beginning in April, on April the 1st, I went from simply just buying stocks or ETFs and shorting stocks and ETFs to a more market neutral approach, because the market was certainly in an uptrend, making new all-time highs day after day. That, however, the price was just absolutely ridiculous. And the risk was just not worth the reward of putting on new long trades. So what we did is we used option strategies. And we'll still continue to use option strategies, but these strategies are more for sophisticated investors using strangles, naked put selling, naked call selling, generating cash flow. And that's not necessarily the best for those folks with accounts below $25,000. It's for more sophisticated traders. So last week, though, we found bargains. We found areas where, you know what, we wanted to buy new positions. BOIL was one of them. We're going to talk about the why behind it. And using TrendSpider, you'll see that on a weekly time frame, a few reasons why we really like the breakout here. And how do we know there's a breakout? Simple. Click the button, automated trend lines, pop. You can see that for the longest time. You can go back and see that for the longest time, we were in a downtrend channel. Here's the upper band of that downtrend channel in red, the lower band in green. So every time we hit the upper band of resistance, well, we'd pull back. But something changed recently. Rather than pulling back all the way down to retest the lower band in green, a great thing happened. We put in a higher low. Let me illustrate. You could see that we put in a low on natural gas the week of December the 28th. We rallied, attempted to break out, but it was rejected. Back in February, we pulled back, and we put in a low, a higher low, the week of March the 15th. Then, subsequent to that higher low, we broke out above this automated trend line in red. So now what we have is, rather than in this case, a commodity in a downtrend, now we're seeing one that's attempting to break out to a new uptrend. This is the value of technical analysis and knowing where your support and resistance levels are. So we began our bull operations on BOIL, and we went long of the shares. We didn't use options. I will be selling covered calls, not right now, but ultimately we will be using covered calls. If you have an options account, that's all you need. Even if you have an account less than $25,000, you're still able to generate cash flow off of your account by selling covered calls. That, however, is you don't want to limit your upside. You want to wait till you get a rally, and then you sell covered calls on that rally so you can go as far out on that strike price as possible, generate as much cash flow as possible without having to worry about getting called out of your position. You don't want to cap your upside. So more on that in the future. So what I also like about this trade is take a look at your Bollinger Bands. Your Bollinger Bands are very, very tight, which implies that you're going to get a resolution, or what they call a Bollinger Band squeeze. And that's a very, very volatile, in this case, what I believe is going to happen, a breakout on price. You're going to see shorts get squeezed, and that short squeeze will cause shorts to cover, driving the price up higher. And during that short squeeze, that's when we're going to look to sell covered calls on BOIL, and we'll also be looking to add more to our position because we're not done buying here. And the same holds true for UNG. Same exact chart, different volatility. So you could still trade along even if you don't want the volatility of a leveraged ETF. Just use the UNG. Less volatility, same chart. So this is BOIL. More to come, members, on BOIL and natural gas. let's go on to the watch stocks for the new trading week. Let's talk about MDRX. MDRX, you could see last week, broke out. And this is, I spoke about this earlier, where I like to manually draw my lines first and then see what else the algorithm is picking up. So here you had a nice wedge formation, and we broke out on a weekly time frame. You have Bollinger Bands, which are fairly tight, and these should widen out on a breakout, a continuation breakout. Now let's throw up the automated trend lines. And you could see that last week we closed above resistance. Pretty sexy stuff. So one strategy you could use here is wait for a potential retest of the breakout point, meaning I'll use very, very little sensitivity. Next week, we should see the shares pull back a little bit because we made a very nice move higher last week. These shares were up 5%. So they may give some back a little bit earlier in the week, but that pullback is your opportunity, assuming that it holds this support level, because what was resistance, this line here in blue, now purple, should now act as support. So this is a validation of our thesis that this is a strong stock, and we never want to go jumping in with both feet and accumulating our entire position. Our first buy is a test of the market. Are we right with our assumption? If we're right, we'll add more. If we're wrong, we set our stops and we get out really quick with a very small loss. No big deal. But if you go all in right away with your entire intended position, let's say you want to buy 1,000 shares ultimately of MDRX, if you do it right away, now you're emotionally invested, and you do not want to be emotionally invested in anything. So we want to open up a small position, maybe 200 shares, tops, and we'll add on strength, and our alert is set. Now, I'll be going over the daily charts with members on future market wraps or morning updates, because we use the daily charts and or 4-hour charts as our timing mechanism to get long of a stock. So members, more to come on MDRX. The next chart up, BRY, Berry Corporation. You may have heard me talk about this stock before. And again, we're going to begin with no automated trend lines. We don't want any prejudices. We don't want to be influenced. First, we want to test our skills. Are we accurate with our assessment? I'm going to use this as our breakout point because we have a volume shelf here, and I'd like to see a breakout above this volume shelf. And that would imply that we're breaking out and above through resistance levels. So let's now throw up the weekly automated trend lines. And you could see that in green, TrendSpider is picking up support. And I agree with this, absolutely. What I'd like to do here is set an alert, because what would be interesting is if we got a pullback next week, very similar to what we just did with MDRX. If we get a pullback and a retest of support, we'll keep a little bit of sensitivity on, not much. There we go. That would be a good risk-reward entry point. But again, we're not going to go jumping in with both feet. 20% of our intended position max, and our alert set. Now we forget it. Now what if we broke out above this volume shelf or this resistance level here? Well, we set an alert because we may not get that pullback. The difference here is where I used the sensitivity on the pullback, because you may not get an exact pullback to that support level. What I'd rather do here is I don't want any sensitivity. Zero. Because all I care about when I'm buying a breakout is, do we close above resistance? I don't care if it trades there intraday, but by 3:59 Eastern Standard Time, I want to make sure that this stock is trading above my resistance levels. Because it doesn't matter where a stock trades intraday. What matters is where it closes. And we'll keep this active for, I guess, 9 days is good. Okay, so we have 2 alerts set here. And again, we'll go over the daily charts with members as this trade sets up. And we'll perhaps revise our strategy here a bit. But members, more to come. Watch Market Wrap each day or Swing Trading today, and we'll talk about it moving forward. The next chart up, Caterpillar, really nice breakout. not last week, but the week before. And this is what you call a bull flag setup. Very nice, orderly breakout. You can see they pulled it back a little bit, came close to retesting the breakout point, no cigar. So we may, because they closed it down, they closed it off the lows of the week last week, but they couldn't close it positive. What that tells me is that there's a very good chance they pull it back yet again. So what I want to do here is create an area where I'd be satisfied with the shares pulling back to retesting a volume shelf. You can see over here on the right, that volume shelf should now act as support. We'll keep a little bit of sensitivity. And by setting these alerts, folks, what you're doing is you're eliminating the emotion. You're eliminating impulse buying. Think about how many times you bought a stock because in your gut it felt right, right? Maybe you bought too early in the morning. By the end of the day, what happens? The stock pulled back off the highs. You're sitting there going, what did I do wrong again? So use the automated functionality. Take the emotion and the guesswork out of your trading. Believe me, it pays dividends. Believe me. Even with my experience, I still use a rules-based approach, take the emotions out, trade off of fact. If this, then that. If it pulls back to support, okay, we buy. If it breaks out, then we'll buy. If this, then that. If it doesn't pull back to our support levels, or if it doesn't break out, then it's not worthy of our investment dollar. We work too hard for our money, and this is a business. Cap, and there we go. And we'll continue to review these charts as the trades unfold with members. The next chart up, FEYE. Okay, so FEYE, remember you had the Colonial Pipeline shut down last week. It was a hack. It was an act of war. And I was surprised to see certain names like CyberArk didn't take off, but FEYE performed very, very well. And you can see here that we're right at a breakout point. We've been consolidating nicely for quite some time now. Before I enter the trade, I'm going to want to know, I haven't looked yet, whether or not they've reported earnings. I do not buy stocks in advance of earnings. If somebody tells you to buy a stock in front of earnings, they're incompetent. It's reckless. It's reckless buying. I digress. So what we want to do here is do one of two things. It's basically, it's rinse, wash, repeat, folks. You've seen me do this on 1, 2, 3. This will be the fourth stock. We do the same thing over and over again. If it pulls back to support, we nibble. If it breaks out, we nibble more. If it doesn't pull back yet, it breaks out, we open up a position. We nibble. It's the same thing over and over again. But we're just going to go over the weekly charts. With members, we'll go over the daily charts as well, because that's more of our timing mechanism to enter the trade. Now you can see here, when I overlaid the automated trend lines, these lines that came up, I'm going to remove my manually drawn one to illustrate here. All right, I'm going to take the lines off. And what TrendSpider is saying is that I'm wrong, that I'm way too conservative with my breakout point. I still like my breakout point better, to be honest with you, but that's egotistical. But also, I'm using a higher level of criteria for my resistance level. They're connecting the dots at this prior high. I would use the latest prior high as my point at which I would want to enter the trade. So that's why there's a difference there. However, for the most part, we're spot on, right? We're splitting hairs here. So according to TrendSpider, we broke out last week. What I would want to see here is a retest of the breakout point. We'll keep a little bit of sensitivity on, not much. Now, what if I'm correct and TrendSpider is a little bit premature with their call for a breakout? No big deal. We have a strategy for that as well. Touch, bounce, 9 days works. What we want to do, if I'm accurate and we don't have a breakout, what I want to do is I want to create an alert down here. We'll keep a little bit more sensitivity on than the breakout point. And there you go. So we have two alerts set here. One, on a continuation breakout, pullback, and a retest. Two, if we pull back and we retest, come into the neighborhood of prior support, we could add there as well, right? But we want to stay small, add on strength. Volume last week was pretty good, a little bit light, but pretty good. And members will go over the daily chart soon. GLNG, this is a weekly chart. And while we have support here at around 11.30 per share, and I like it, we'll set an alert there. A little bit of sensitivity, not much, less than that. Okay. So we have an alert set there just in case we retest, as we have been doing. It's highly probable. The however is this. What I really like is that, again, with the automated trend lines, you can see that we have resistance immediately above. So what I want to do is I want to set my alert at this resistance level, and I want to know when we break out. And I don't want any sensitivity. Again, when you're buying breakouts, you don't want to buy intraday. You want to wait to the final half hour of trade. Make sure you're going to get a breakout above that support level, because a lot of times institutional investors, they make their moves for the following day in the final minutes of trade. So that's why it's so important to wait, especially in this market where there's so much volatility that those final few minutes of trade can make or break a trader. And if you enter the trade prematurely, well, then you're going to be kicking yourself because now your confidence is hurt. And there's a lot of confidence that needs to be had to be successful in this business. So we want to see a breakout above weekly long. And I don't type out nibble, nibble all the time. I do it to put a smile on your face, but to also help you think about staying small, add on strength. It helps you validate the accuracy of your trading. And if you're wrong small. Stop out small. That's the key, position sizing and buying right. If you get those two worked out in your head, because this is a mental game, it's a discipline game. If you get that worked out, you're going to be consistent, you're going to be profitable, and you're going to be very, very successful. So work on it, please. I beg of you. It took me a long time and a lot of money to figure it out. And there we go. Our alerts are set here for GLNG. And natural gas is looking good. You can bet there's a correlation between nat gas and GLNG. More to come. Members will talk about the daily chart throughout the week and how this trade is unfolding. HGV is the next chart up. This has been a watch stock in the past, as you can see, because I have alerts set up here. Are they still active? Sometimes they expire. Yeah, this is expired. So I'll reset this alert. I don't think it's going to fire off. Maybe it will. You never know in this type of volatile market. So why not? It doesn't cost anything. No nibble nibble. Okay, so we'll keep this active 9 days, and we're good to go. I'm not seeing significant automated trend lines here. Let me take them off, put them back on. All right, so you have one down here, but we're not going to hit that. That's support. You have another one down here. Let's overlay. I'm going to take the weekly trend lines off, and on this weekly chart, I'm going to overlay monthly trend lines. So you can see that in dashed line, look up here, upper left, we have a weekly chart set up. However, I have monthly trend lines overlaid on top of a weekly chart. This is a very powerful tool. And honestly, it was this functionality that attracted me to TrendSpider and meeting up with their management when they first started out. I met up with them in the CMT, the Chartered Market Technicians Association, back in 2017. And ever since then, we've been good friends, great friends. So I like this setup here. I'm going to keep my alert set here, but you know what? I'm going to set an alert here as well on the monthly chart. I'm not going to keep any sensitivity. All right, so support level 1 of 2. So I have, the reason why I put that up there is I have the monthly support, that's support level number 1, but my more ideal support level is support level number 2. Touch, bounce, and we're good to go. Also, I want to check the seasonality of HGV. This is a little bit too tight, 4 years. We're going to go back, let's go back 10 years. Oh, they can't go back 10 years. All they have is 4 years here. So this is really not, it's too thin of data to work off of. Seasonality is a very, very powerful tool, but if you're working with too thin of data, it's not worth using. As a matter of fact, it can cause you trouble. You usually want to use 7 to 10 years minimum of data. So what else I would like to see here to get long is a continuation breakout. And we'll keep this active for 9 days, and we're good to go. So we're looking for a pullback to retest one of 2 support levels. One's a weekly, one's a monthly. Or I should say, a breakout above resistance, which marked the highs of last week. So very interesting chart, very attractive, assuming that this market holds up and doesn't begin to go to hell in a handbasket. Last chart up is going to be NGS, Natural Gas Services Group. Again, this is not my pick. It's from one of our members. And if you bring up the automated trend lines here, you could see we broke out not above one resistance level last week, but two. Also, what this illustrates, again, I'm going to take the automated trend lines off, put them back on. Watch this lower portion here, right above this line in blue, which is the 50 period moving average. Watch right at that line. And there you go. You can see this line in green popped up, and that marks your higher low. We spoke about that earlier, I believe, with MDRX. So this is a very powerful setup. We did not retrace all the way back down to this lower band of the downtrend channel. What we did was we put in a higher low, then we broke out. Very powerful stuff. If we break out and above the highs of the week of March the 1st, that's a continuation breakout. You have a new bull run going on. This is a natural gas play. Remember, natural gas is at the doorstep of a major bull run here. So if it begins to break out, you can bet your bottom dollar that GLNG, NGS are probably going to break out higher as well. So with that, folks, please, if you get any value out of this video, subscribe to the channel, click the like button, so share with a friend, and also take advantage of our 14-day free trial offer to the Contrarian Trader. If you join now, you'll find posted in the members area our analysis of the week that closed out last week, how it influenced our trading strategy going into this coming week. And you also get more access to me, whether it be on our Slack forum or when I send out my evening commentaries, market wrap. And you can also join us 6 p.m. Eastern Standard Time live on YouTube for our live stream, where we review the opening price action of the futures market. And don't forget, TrendSpider, 35% discount code below. Take advantage. And until tomorrow night, folks, when we go live, everybody enjoy the remainder of your weekend. Have a profitable trading week and be well.